Hi, I'm Helen Forster, and this is a debrief of Section A from the TX mock exam. What I want to do is to run through some of the trickier questions and show you how to approach them and how to answer them, and most importantly, how to get them right. I've chosen 5 questions. And the first question that I want to run through is question 1. So this is Fatima, and this one is all about self-assessment admin. So you can usually expect to get several questions in Section A on admin, everybody's favourite topic, and this one is about late payment interest. So we have to calculate how much late payment interest Fatima will have to pay. We're given some details about her payments for the tax year. So we've got a first payment on account, a second payment on account, and a balance, and we've got the date that those were paid. Now, late payment interest is only due, as the name suggests, on late payments. So the first thing that we need to do is to think about when those payments were actually due. And for the tax year 2024-25, the first payment on account is due on the 31st of January during the tax year. So that will be 31st of January 2025. The second one on the 31st of July, just after the end of the tax year, so 31st of July 25. And the balancing payment is due along with the self-assessment return on the 31st of January 2026. Now, if we look at those payments that Fatima has made, the first one was made on the 1st of June. It was due on the 31st of January. So that first one is late. And we work to the nearest month unless you're specifically told otherwise. So June from the end of January, February, March, April, May takes us to the beginning of June. So that one is 4 months late. The other 2 payments have actually been made on time. So the only payment that is going to generate any interest is that first payment on account. And to calculate the interest, we need to use the tax tables. So remember, you've got the tax tables in the exam. Make sure that you familiarise yourself so that you know what's included in those tax tables. And we need the rate of interest on underpaid tax, which is 7.75%. And then to calculate, you can use the scratch pad to show you're working. So we need 7.75% multiplied by the payment that was late and multiplied by 4/12 because it was 4 months late. And that gives us the second answer, which is to the nearest pound, £96. 2 marks for each one that you get right. Nothing if you get the answer wrong, remember. And all of these multiple choice questions, the wrong answers, the distractors, are carefully calculated so that you will get those if you make a simple mistake. So for example, the first one calculates 7.75% on 3,700, but then forgets to time a portion. A very easy mistake to make. The third one works out the interest on both of the payments on account and doesn't time a portion. And then the final one, I think, actually calculates the interest on the total liability and doesn't time a portion. The next question I want to look at is question 8, and this is all about the child benefit income tax charge, which involves some fairly complex calculations. And for this one, again, you'll need the tax tables. In the tax tables, you're given details about the child benefit income tax charge, which says that where income is between 60 and 80,000, our charge is 1% of the amount of child benefit for every £200 of income over 60,000. So you've got it all in the tables there. What it doesn't tell you is that this is going to be based, where we've got a couple, on the higher income. So even though Priya's husband is the one who's receiving the child benefit, he's only got a salary of £30,000, we're actually going to calculate the charge based on Priya's salary of 65,000, and we've got the child benefit figure of 3,094. Now, before we start, that means that we can actually rule out the second option, which is zero charge. So as long as you knew that it was going to be based on Priya's income, then you know that that one's wrong. And because Priya's income is not above 80,000, we know that the full amount is not going to be repayable. So we can rule out the first option as well. So that means that we at least now have a 50-50 chance of getting it right. So even if you didn't quite know what to do, then you should still have a go, because one of those two answers must be the correct answer. And for this one, again, I would use the scratch pad to do the calculations. So we take Priya's salary of 65,000 minus the lower limit of 60. We're going to divide that by 200. So you've got 5,000 divided by 200 is 25, and it's 1% for every 200 over 60,000. So 25% then times the child benefit of 3,094. And we round that down to the nearest pound, which means that our child benefit tax charge then is 773. The final answer was actually calculated by deducting the 773 from the child benefit, which is a fairly logical mistake, but the correct answer, 773. Let's move on now to question 13, which is all about national insurance. And this one asks for the amount of Class 1A national insurance payable by CARP Limited in respect of the benefits provided to Lucinda. And national insurance is a tax that is quite often overlooked, but it is quite important, and it will usually be worth a few marks in the exam. You get quite a lot of help from the tax tables. So in the tax tables, you have all of the rates for the different classes and the bands. You just need to remember what those are based on. So we have Class 1 for the employee and the employer. Class 1 will be based on cash earnings. Class 1A is what we're concerned with here, and Class 1A is based on benefits. So that's going to be at 13.8%. And then Class 4 is what will be paid by self-employed people. So that's not relevant here. The one thing that the tables don't tell you, of course, is what benefits will be subject to Class 1A. And it's going to be the taxable non-cash benefits. So, of course, for this question, we have 3 different figures provided. We've got private medical insurance. Lucinda has made a claim and the insurance provider paid £500. And we've got some cash vouchers. Now, cash vouchers are a cash benefit, so those are definitely not going to be included. The one that you might have been a bit unsure of is the amount paid by the insurance provider. And in fact, that figure is not going to be included. The taxable benefit is going to be the cost of £1,400. So all we need to do is to multiply the 1,400 by the rate from the tables. And you could probably just type that straight into your calculator for this one. And that gives us our answer of 193. Now, of course, the second answer is what you would get if you did include the £500 as well. So if you weren't quite sure about that, then unfortunately you would just be guessing. The third option is just based on the cash vouchers. So that one should have been fairly easy to rule out. And then the final one is the medical insurance plus the cash voucher to give 538. So the correct answer, 193. The next question, question 14, is about pension contributions, which is another slightly tricky area. And this one is asking us for the amount that will be subject to an annual allowance charge in Buffy's income tax computation. from the tax tables. You've got the pension scheme limits. We've got the annual allowance for various different tax years. So the one that we're going to need will be the one for the current tax year. And we've also got the income limit. So the relevant figures here, 60,000 is the full annual allowance for the tax year 24-25, and the income limit is 260,000. Now the question does tell us that Buffy has no brought forwards unused annual allowances, but remember that if the annual allowance is not used, then it can be carried forwards for 3 years. So that's not going to be relevant. So we are just going to be starting with the 60,000. However, we've got Buffy with adjusted income that is greater than the income limit. And that means that we're going to have to reduce that £60,000 annual allowance. And this is the bit that you have to remember. It works in exactly the same way as the personal allowance. We're going to reduce by half of the excess. So into the scratch pad. And we have the full allowance of 60,000. Obviously, when you're working in the scratch pad, you don't need to write out as neatly as this. It's just a way to record what you're doing. Nobody else will see it apart from you. And we're going to deduct 50% of the excess. So 50% of 280 minus 260, which gives us an available annual allowance of £50,000. Now that is actually the first option, which is wrong. We're not asked for the allowance available. We're asked for the amount that will be subject to an annual allowance charge. And it's the excess contributions which will be subject to the charge. Buffy's made contributions of 85,000. There's no mention of anybody else paying in, but we would include an employer's contributions if there were any as well. And we need to compare that to the available allowance. And that gives us an excess of £35,000, which is the third option here. The other options, the £25,000 is what you would get if you didn't restrict the 60,000. So if you used the full £60,000, you'd have an excess of 25. So that would be quite an obvious mistake. And the final one uses the minimum annual allowance. So the most that the annual allowance will ever be reduced to is 10,000. And if you use 10,000, then you would have an excess of 75. The final question that I want to look at from section A is question 15. And question 15 is about groups of companies for corporation tax. This can be a slightly challenging area, and you do need to remember the percentages that are needed to form the different types of group for tax purposes. This question tests your knowledge of chargeable gains groups. We're asked which companies are within a chargeable gains group with Apex Limited. Chargeable gains groups need a direct 75% share and an indirect share of greater than 50%, where we have sub-subsidiaries. Now in this one, we're given details about the various shareholdings, but we don't actually have a group structure diagram. So the first thing that I would do is to construct a group structure. Think about which company owns which other companies, and then we can start to get an idea about which companies are going to be in the same gains group as Apex Limited, which is our ultimate parent company. A owns 85% of B and 100% of C. B and C are then direct subsidiaries of A. We're also told that B owns 75% of D, and C owns 60% of E. To form a gains group, we are looking for a 75% direct share. Start with A. We've got 85% of B, so B can be in the same group, and 100% of C. C can be in the same group. The tricky bit is when we come to the sub-subsidiaries. What effective share does A have in D? We multiply 85% by 75%, which gets us 63.75%, and because that is greater than 50%, and we have 85% direct, 75% direct, that means that D can be included in the same gains group as A. On the other side, it looks like we can include E as well. A's indirect share in E is 100% times 60%, which is of course 60%, and that is greater than 50%. However, the direct link between C and E is less than 75%. And that means that unfortunately, E cannot be included in the same gains group as A. So our answer, B, C, and D can all be within a gains group with Apex. Now, one thing you might be wondering is, how do I draw that group diagram if I'm not allowed to use scrap paper? If you're just using the scratch pad, you will need to be a little bit creative here. But as I've shown here, you can kind of draw a group structure diagram, but just without the lines. You can set it up, put in the percentages, and then that should hopefully help you to visualize things. So we've got the same group structure, but without the lines, and then you'd have to multiply to get the indirect percentages in the same way as I did with my diagram. So that was section A. The key is to make sure that you spend enough time here and make sure that you answer all of the questions. Even if you're not sure, you don't get marks taken away if you get a question wrong, you simply score 0. So if you're not sure, you could still have a guess. And often, even if you're not 100% sure, you can probably rule out some of the answers, and then at least that increases your chances of getting the right one. And that's the end of this debrief of section A, and I wish you all the best with your upcoming exam.